Welcome everyone to today's webinar titled Value of Better Payments, Additional Use Cases. This is Brian from Strategic Treasurer, and we're pleased you could join us as we consider different payment types and how they address particular use cases at various organizations. Our speakers for today are Mark Robertson, Executive Vice President, Corporate Financial Services Chief Administrative Officer at SouthState, and Craig Jeffery, Founder and Managing Partner of Strategic Treasurer. Welcome, Mark and Craig, and I'll now turn the presentation over to you.
Thanks so much, Brian. Appreciate the introduction. Mark, it's good to present with you today. Thanks for collaborating on this.
Likewise, Craig. Glad to be back with you guys.
And everyone, we want to add our welcome to you. Appreciate you spending some time. You have a lot of things to do each day. We are appreciative of you spending this half hour with us. So thank you for doing that. Let me begin by going over our topics of discussion. This is what we're going to cover for the next 28 minutes. The situation has to do with a number of use cases or challenges that many organizations face. Not everyone faces each challenge across each dimension in the same way, but many of those challenges are solved by either speed, enriched data, better security, and a few other areas. And so this is why we're talking about better payments, not just faster, not just more information in payments, but a combination of these characteristics. And from faster, more enriched data and security, we will step through, Mark will take you through a few use cases that touch on non-repudiation, visibility. They'll cover topics such as claims payments, accounts payable, cash concentration, and multiple use cases where speed and better visibility matters to the trading partners. On our key takeaways and final thoughts, we're going to hit three topics, which I already mentioned: speed, data, and security. We'll leave you with those items, a few summarization points there to factor in to your business and your situation. So again, thanks for joining, and let's jump into it. And Mark, I want to get you involved in this one right away.
Sure.
On the payments evolution, I mentioned speed, enriched data, and security. Why don't you take us through the core priorities and how these help address those?
Yeah, we've seen quite a bit of shifting going on in the landscape over the past 5 years or so in particular, and certainly speed has become a critical factor, particularly as we see rate environment shifting for us. Automation becoming a lot more important for efficiency activity. So the same day ACH, the real-time payments, that is playing very much into the speed issue that many of our clients are looking to address, the finality of settlement, the surety of settlement. But now we see, particularly with the instant payment rails, coming into play with the enriched data that goes along with that. We saw that a lot back in the 90s with EDI coming out, but now we see that coming back into play again with the upcoming conversion to ISO and the data richness that goes along with that. And then you layer that on, tightening of expense issues, again, rate environments. And data overall is becoming very valuable. And so not only just moving the money, but allowing that data to go with it. And as we see advancements in technology coming around, that data is even further bringing value to the process. And then, of course, security has always been an issue. We've seen, and obviously, upticks in security issues around the check environment, particularly of recent years. We've seen those numbers grow again. But as we also watch some of the network rails, particularly around NACHA and others, move more to a risk focus around credit push. Debit's always been there, but now there is a lot of focus on credit push, and we see that also in the instant rails with the requirements to do that fraud analytics before you put it into the system. So, technology, the instant payment rails, all of that is moving us towards doing things faster, doing things with more value. So that's what we've seen over the time, Craig.
Yeah,
So,
you brought up a lot of good points. You know that, and so always hear some people say, "Well, faster payments leads to faster fraud, but better
right.
control, whether it's slow or fast, there's a certain set of security measures."
Yep.
Now, since we're talking about speed,
Yep.
there's a variety of speeds that take place. Maybe you could highlight a few things for the broader group.
Yeah, absolutely. And we, if some of the participants were with us back in May when we talked about this, we've looked at this as we've gone through the time period. I know when I came into banking over 35 years ago, Lockbox, we were just talking about this today with some of my cohorts. Lockbox was a big product, and check, and everybody was trying to resolve the clearing float issue with check and how long it took, and managing the float within that. And we saw as we moved through ACH come into play, the enhancements as additional standard entry classes came out with ACH payments. We began to see that move quicker and quicker down the road. Of course, cards have always been there, but even over the past 3 to 5 years, card payments and now virtual card payments, we have a lot of clients moving to virtual card. And so we just see the time frame. And again, I think the rate environment is putting the value and the pressure on being able to move these payments, not only faster, but with more surety, with more predictability of settlement and clearing. We've seen tremendous growth in the same day ACH since coming into play in 2016. And, we just expect that to continue. There is some displacement out of these slower rails, but we're just seeing payments even being broken down and moving in different modalities across the time. So it's helping our clients deal with that predictability, that cash flow management, the surety and finality of payments, and so that speed's helping quite a bit.
Would you say generally
So
that there's more payments being made rather than necessarily a wholesale shift away from
yep.
most of these categories? Okay.
Yeah, that's what we're seeing at this point. And I think the numbers in some of the industries reported volumes are showing that as well. Checks always declining, but not there fully gone yet.
Slowly. Yeah.
Yes.
Well, everybody, if you're paying attention, you'll see on your screen or perhaps behind one of your windows the first poll question. There are two poll questions in there. They're both select all that apply. So your screen may be smaller. You need to extend the window. Go ahead and select all that apply for which of the following payment priorities do you see as most critical for your organization right now. So it may be balance, maybe one or two. And then the second one is what are the main challenges your organization faces when you're doing integration of these payment technologies. So this will be quite useful for the group and an interesting piece. If we just have, let's just say 80 people type the word SouthState into the chat box, we'll send all the results of the polls to you with the slide deck. So we'll include all of that. All we're asking for is 80, just type in SouthState. If you type the word poll, it still counts. And we'll go from there, give everybody a chance to include that. And then as soon as it's ready, I may make a quick comment, but we'll move on to enriched data in just a moment. I'll just make a couple of comments on this about the priorities and challenges. Security, number one, far and away. Speed is 62.5% of security in terms of importance, and enriched data is less than half. So nearly everybody thinks security is important. Speed is important. There's certainly use cases, so really quite interesting. The biggest challenges is integration, followed by costs and budget constraints. Really interesting information. There's much more we could talk about this, but this is a rapid webinar. It's quick. It's a bit of a sprint, so we'll move on to the third area, Mark, on enriched data. So each of these modalities has different amounts of information that could come through. Maybe you give us a summary or some highlights here.
Yeah, obviously, let's just take a few of these. You look at check data and, going back to your poll questions, do we see that challenge of being able to take advantage of data? Checks have always been, you think again of lockbox and in clearings, and you have a lot of remittance data that comes with that, and you're faced with the challenge of a very two-dimensional manual keying in of that data, scanning image, hopefully maybe doing some OCR on that data. And then you move down the rail a little bit with ACH, where you can carry some data, whether you're looking at a CCD plus that'll carry 80 bytes worth of data, up to a CTX that'll carry a full EDI 820 with it. But again, that automation of being able to ingest that data, we come down the pike of beginning to see the amount of data and the value of data being merged with the money movement itself, with that speed, bringing that speed into play with same day ACH, with real-time payments and FedNow with the ISO messages. Now we begin to see not only the money moving quickly, but now your data can go quickly as well. And we do hear what the poll is suggesting is that, it is taking vendors a while to be able to re-architect and retool to be able to take advantage of that data. But the good part about it is the banks are getting out in front of it. The payment modality systems are getting out in front of it, so that as the industry is ready for it, that data will be there in an electronic fashion for that automation. So, there's a real opportunity to really automate off of this, between the data not only coming in electronically, but with systems and robotics and business intelligence tools and mining that data, not just clearing and posting and reconciliation, but also doing data analysis, behavioral analysis, client expectation analysis off of some of that data. There's a lot of richness that's within there.
Yeah, that helps both parts of the equation, the sender and the receiver. The receiver for posting, the sender for not having to take as many exception calls from the defect on the other side. Don't know how to post it. Now I've got to interrupt the sender and say, what were you paying?
Just real quick on that, Craig. We're actually getting pushed by our clients to help them with data and ingesting it in servicing models, particularly our embedded payments and bill payment platforms. So yeah.
Yeah, excellent. The other area, security, which 80% of you mentioned was a top concern. Where's the vulnerability? Security level for checks tends to be low. We're familiar with that. We understand check security features, whether you have 1, 2, or 18 different security features on the physical check, plus some of the bank services, positive pay, pay match, positive pay, other services that help protect checks. Those we're pretty familiar with. ACH is a secure network. There's secure features such as ACH positive pay or pre-authorization, or depending on what back-end system the bank's using, they have other creative names for it to reduce the number of types of payments that come through unchecked or unmatched. But as you look through the entire schema here, it's pretty interesting when we think about like real-time payments. There's encrypted systems keeping data encrypted in the entire process, checking and validating items on a real-time basis, authentication for back and forth for how messages are communicated. More of these faster, newer payment rails have contemplated more information and better security. This I think is crucial, because some of the older payment rails, it was only it was sending a file with some login credentials, and then it was encrypt it, and then now it's have additional measures. So things like multi-factor authentication, if you're logging into a portal to make sure that's right. There's a growing number of security features that help protect payments across the board, whether it's at the rail level, through your banking partner, through a fintech provider. And one of the things that's happening too, I think, on the payment rails that's very interesting is we're seeing a view to protect the payment rails growing over time. And I'll try to be really brief on this. We saw that with card, with PCI DSS, payment card industry, data security standards. That's been in place for well over a decade. Every year that standard grows. That's to protect the rail and ensure confidence in it. It wasn't that many years ago, a little more than 5, that SWIFT, the customer security program, was implemented to help protect everyone entering the network, to provide assurance for that. We see growth in the ACH network for large volume originators having to tokenize or otherwise encrypt payments to protect that type of data. And so we see payment rails stepping into it. We've always seen banks adding features and security measures at a great price to help their customers protect themselves because it makes sense. There's quite a bit on this slide. It's left for you to look at, but I could get hung up on this another 10 minutes going through each of these individually. Mark, I'm going to move on to the next poll question, unless you have anything you want to highlight on there.
No, I think you covered it well.
Yeah, so quite a bit there. This is our second poll question and final poll slide. The third question within it, number 2, adopting new payment technology. This is select all that applies. What would make your organization more likely to adopt new payment technologies that offer enhanced features, speed, security, and rich data? Check all that apply. Go ahead and list those. If you don't know, click other or unsure, or it's not applicable to you, put other or unsure. So we've heard your feedback about making sure we include an unsure, and that just shows you how responsive we are. All right. Go ahead and submit that when you're done. In the chat box, you can see the link to follow Strategic Treasurer or follow SouthState on LinkedIn. Our marketing teams would like that. We would like that. And I'm told we just need 17 more SouthStates in the box to send everybody the results. So looks like we're going to be flying by that. Mark, you'll start the next slide. I just wanted to make one comment on this one, though. Easier integration with current systems, just over 3/4. This ties in extremely well to one of the biggest challenges was the integration. Right. So everyone's being consistent. We'd like that. That's great. Stronger security assurances, that faster payments equals faster fraud concept. People want the security assurances and to know that the security features that are put on there make sense. So this is good messaging information. Wow, there's a lot in here. I'm going to control myself from commenting more on that, but there's a lot of good items. I think we surpassed the number that I asked for, so we are good to go. We'll send you all of those results. Now, Mark, why don't you start us off with what matters and when? Not every business case centers on the same element.
Yeah, certainly nowadays, as we go back, and we've already talked about this a lot, is speed. We see the money movement, not just moving faster, but the surety of that settlement happening faster. In the speed category, it's a lot of the use cases that most people probably are familiar with when we start talking about same-day ACH and the real-time networks. And, you see it around earned waged access, the gig economy, the immediate settlement in the restaurant industry. We see it a lot with, payout of tips and wages and from that perspective. But we are also starting to see speed come into play in the disbursement arena as well. As we look at, we look at our medical disbursement and also insurance claim distribution. Where you've got clients that, they're standing in front of you, you want to settle with them, or they need to make deposits and you need to insure those funds. The speed is really what's driving those instant payments. And I think a lot of that's coming out of, the push from the consumer world moving into the corporate world with a lot of the digital wallet apps with, Cash App, Venmo. And so that characteristics coming over into the corporate and commercial arena as well. in the data area, again, I think it comes back to, we've talked a lot about this of being able to be very efficient in clearing your postings, your AR, being able to do research. Again, we have a lot of clients that are looking for that data. They are bill payment platforms that are trying to get that data back in to help with research, servicing and customer servicing, and then later on building out further capabilities of products and services and predictability for our clients and for their clients. So, those are the big ones. Flexibility, not a lot to say from that perspective, other than where we see flexibility in the payment atmosphere is our clients moving more towards, intelligent routing and reasonable routing. Not always having to say it's got to go check or it's got to go ACH, but based off of, when do you need to have something cleared? When do you need to have it settled? And then allowing the clearing systems and based off of cost and predictability, drive that flexibility, Greg. So that's a lot of what we see from our perspective.
And multiple other situations may require non-repudiation. That's the finality. You want finality for some type of payments more than others to make sure they can't be taken back because you're releasing goods or you're closing on a house or a business deal. So finality matters. On a visibility standpoint, counterparty communication matters for good relations for multiple factors. I'll just focus on one. Defects are such a significant problem for companies in business processes. Defects are caused by errors or lack of information. A defect is it's bad information that causes an exception process to fix it, right? People picking up the phone, calling, typing an email. And so a lack of information, a lack of data can create this opaqueness. I don't have the information I need to do what I'm doing. Now I've got to involve another human, contacting them. So defects lead to manual processes, repair, significant costs. So errors, lack of data are there. They impede visibility. Visibility helps organizations, not just on the posting side, but if someone knows when you're going to pay, if you've posted and made that available, even if they're not getting paid for 3 days, they know. Now they're not going to call you and say, when are you going to pay, when they have confirmation that that's the case. Now, Mark has gave a number of really popular use cases in one of the previous webinars we did, and people want more. I know you can't go through all these, Mark, but maybe you could highlight a use case 2 or 3.
Yeah. Yeah, we've touched on a little bit of them before. I'll take a few off of this page here in the sense of, like claims payments or disbursement payments. We do see this in the insurance and medical disbursement, release of goods shipped. We see that in the shipping arenas where clients are holding goods until they have confirmation of payment and they can release goods at that point. Obviously we hear a lot on insurance claims and distributions. So those are some of the more important ones. Also, you look at it from the perspective of closing on business. We hear it a lot in the mortgage arena and lending arena, even in commercial lending, that as we reach closure, then you can do the disbursement of funds immediately. So those are a lot of the use cases that we're seeing predominantly within our area at this point, Craig. And I'm sure with you guys out in the field and talking to a lot of other ones, you hear of some other use cases as well.
Yeah, certainly some. One of the items, the cash concentration. You want to be able to move funds and doing wires or ZBA if it's in the same bank, but moving it across banks. Not everyone has to move, $100 million at a clip between banks. So some of these have same day, immediate funds, very, very affordable, easy to run. So those that are on from a treasury perspective are liking how those limits are kicking up, right? They started low, like we can't use that for work. And then then as they grow, they reach up. It makes a difference. But whatever the needs are, there's certainly a lot of use cases that can be explained and addressed in some different ways. I know we're already at our final presentation slide before we turn it back over to Brian. Mark, why don't you kick us off here, and I'll wrap up on security.
Yeah, absolutely. And again, not to keep revisiting, but I think, we've hit on a lot of this. We talked about speed, we've talked about data, we've talked about security, but, leaving folks with the fact that what we see most in the industry right now focused on is speed. A lot of that, again, has to do with it's not just speed, but it's speed tied with that surety and finality that you mentioned, Craig. Our clients making sure that they can, in a rate environment, instead of, questioning when do I need to release funds, to make sure that they're there on time, they can release them with a guaranteed automatic confirmation and a real-time payments that the payment's been made, it's been accepted by the receiving institution, it's posted, and if they need confirmation from their receiver, they can even get that as well. So, speed is certainly there with that surety. And I think data is going to take time. We saw it in the poll questions and responses, in the sense that the data's there, but it is going to take time for the vendors and the capability to ingest that data to get the full value out of that data. It's going to take a little bit of time for that to come, but it's very important that it's there. And so if we can get to the point where we're sending the data and moving the data, we have rails that can move that data with that payment. I think it's going to move a lot faster than it has in the past, as far as ingesting and taking value of that data. So I would recommend, and we're recommending to a lot of our clients, stay on top of the data, stay on top of your vendors, make sure that you're talking to them about preparedness for being able to take that data in. And there's a lot of, dev partners out there that will also help with a lot of the technology, and the cost of that's coming down as well, as we see. So
yeah, thanks, Mark. And so security, 4/5 of you identify that as a really key concern. So I'm only going to say one item with a couple tangents on it is Treasury is the superintendent of payments, and maybe your group is smaller, doesn't have a Treasury role per se, but a Treasury activities going on. Protecting payments matters, and so they're also superintendent of payment security. They have to stay ahead of the criminals. That's essential. So listen to your bank, see what they're doing, observe some of these new, better and faster payment methods. They can help in a number of these areas, and it's part of the overall design process. With that, I thank you and appreciate it, Mark, and everybody, for listening. We'll turn it back over to Brian for a few closing announcements. Thank you.
Thank you, Craig. Thank you, Mark. And thank you, everyone, for joining us today. The CTP credits, today's webinar slides, and a recording of today's webinar will be sent to you within 5 business days. And for more on leveraging speed, data, and security, be sure to download the Treasury Technology Analyst Report by clicking the link in the chat box. Thank you, and we hope you have a good rest of the day.